All right, welcome to Liftoff, a new interview series where I talk with leaders in the financial services space about how they're building and scaling their businesses. Today I'm joined by Brad from, I think it's Responsive Mortgage as a part of Gold Star Financial, right?
Yes, sir. That's the day to day. How are you?
Good. How you doing, man?
I can't complain.
Cool,
I'm
man.
out in Tahoe at the moment.
Oh,
Beautiful, beautiful
wow. I am
place.
jealous. That is a really big. But is that where you're based, or?
No, I'm actually kind of based out of Phoenix, southeast part of the valley,
Got it.
and occupational hazard, a lot of travel.
I feel you. Well, enjoy your time out there. I've been there. It's beautiful. So why don't we just start off?
Looks like some pump.
Oh yeah, I'm not in too
Oh
bad
God,
of a place too. I'm in
I
South.
saw the palm
Yeah,
trees
I'm
in
in
the
South
background.
Florida.
Okay, very cool.
So yeah, man. Why don't we start off just with some introductory information about you and your company, and we'll go from there.
Let me put this on Do Not Disturb here for a second. My son started calling me.
Okay.
My bad.
No problem.
So you said some introductory information.
Yeah, just on yourself and the business.
Yeah. How did we get connected?
We got connected because I have some folks that are just literally looking for people for me to bring on this podcast.
Okay. Oh, very cool.
Yeah.
Um, so yeah, been in the mortgage space for 20 years now, a little over 20 years. Uh, Started that in '05, shortly after returning from Afghanistan. So a
Oh wow.
military guy outside of that. Um, and then just kind of had a student of finance mentality, absolutely went all in on real estate. And then by being a professional lender, I ended up becoming what I would say is a professional borrower, building a real estate portfolio alongside my wife.
Okay.
She's an absolute awesome operator. And so, kind of leaning into the small business of building a real estate portfolio, surrounding everything we can around real estate. And today serve better part of majority of the country
Hmm.
in the mortgage space, partnering with elite real estate teams and kind of bolting on, creating awesome service for clients. Really focused on the education side of it, the
Hmm.
contribution, and the business seems to grow pretty well when you're focused on the right things.
Just by the way, just so you know, which may make more sense to you, I am a real estate developer, and so
Oh, cool.
so yes, my background is very much in real estate. I've run a real estate private equity platform for the last 10 years, um, focusing predominantly in the multifamily space, but I also um, do single family now down here in South Florida. Um, and so, yes, I was too a professional, or have been a professional borrower, as it is certainly a key component of our business. So what kind of real estate do you and your wife do?
So, all residential use,
Hmm.
multifamily, single family, and then I'm big. I ended up getting into the investment advisor space because it was actually just out of curiosity. My
Hmm.
clients on the financing side
Yeah.
would inquire about, my terms, and then they'd be like, I'm going to go take it to my financial advisor.
Hmm.
So I was kind of like, what does that guy know that I don't? So I got my Series 7, 66, even dabbled in health and life license. just so that I could lift the curtain
Hmm.
on that and see, what was behind that.
Interesting.
And that helped me really understand how I could make a bigger impact on a household
Hmm.
or a family from a financial standpoint. Um, so I learned though through that
Hmm.
diversification. And so we do long-term, midterm, and short-term rentals uh, in that single multifamily space.
Got it. Any geographic focus or?
I'm heavily weighted, I'd say, in Nebraska. But we had eventually branched out into Colorado,
Hmm.
partially because we're a ski family. So there was some great opportunities
Yep.
there. And then I would say I'm the influence on the ski family side. My wife actually likes the warm weather, so
Hmm.
that's how we ended up getting into Phoenix and ultimately relocating there.
I like both. I love spending time in Colorado, um, both for work and pleasure. We had some properties in the Denver area and Colorado Springs that performed really well. And yeah, no, I've been skiing in Colorado my whole life, so I get it.
Nice.
I
You got a
definitely.
favorite resort?
I mean, Aspen is really where I've spent most of my time. I learned how to ski in Beaver Creek, and then at a certain point we started going to Aspen, and that's pretty much always where I've been going. But
Yeah.
I've gone around a few other places. I skied Big Sky last year, um, and I mean, been to plenty of places on the East Coast that don't compare.
Yeah, for sure.
Yeah.
I discovered Utah in recent past, so that's started to gain a little bit of my attention. I found it like the actual ease of travel is better or
Uh huh.
easier um, in the Utah side versus all the switchbacks on the Colorado side. The traffic is
It can
just
be tough. Yeah.
a little grueling.
Yeah, Utah is definitely on my list. I've got a lot of friends that go out there and have places, so we'll definitely
Yeah,
be checking that out. So let's get back to what you do with responsive.
yeah.
What would you say like the problem is that you're solving for people, or maybe more specifically, like why is someone going to come to you instead of walking into their local branch and trying to get a mortgage that way?
Absolutely. Yeah,
Hmm.
there's a couple of perspectives on that.
Hmm.
One, as the individual service provider and looking at me through the lens of the consumer direct relationship, it is what I mentioned before, just really consultative. No anymore rates are not as low as where it's a no-brainer decision.
Right.
So we need to put a lot more thought and strategy into the plan that I say, architect. And so much of the world has gone to this fast and easy approach.
Hmm.
And my analogy for that is like when I'm hungry, yeah, I might hit the drive-through, but that's not where I'm getting the most nutritious source of food.
Right.
So let's spend a little bit more time, right? I'm gonna put my signature on a document that says I'm locked into a 30-year arrangement. Let's put a little bit of time and effort into planning it, make sure that we're doing it the right way. So that's the reason why I think it's a lot different than one, the branch on the corner
Hmm.
and the individual and their licensing and maybe what they know and do. And then bigger on the larger end of it, so I'm a divisional for the company responsive. So I have branches in multiple
Hmm.
areas, and we service again the whole United States. So the problem we're solving is the consolidation in the market where the big box companies are gobbling up other companies.
Hmm.
And a lot of it's really acquiring the data. That's where the value is. And they want to be able to market very heavily to those households. So the servicing companies are being purchased, the real estate companies are buying the mortgage companies,
Hmm.
and we're trying to maintain the control because the bigger they are, the less I would say the less valuable the individual household is to them, right?
Hmm.
Their decisions and their options may not weigh in favor of the household. Think about how many big banks pulled out of HELOCs for a little while. I
Right.
think Chase maybe just brought them back.
Hmm.
And that's a huge tool that, money to me is a tool, and you have to be skilled in the tools you're using.
Hmm.
Otherwise, you're more likely to hurt yourself. And the HELOC is a great tool for the individual homeowner or the mom and pop investor
Hmm.
who has good equity in their property
Sure.
and they want to use some strategy to maybe diversify their investments. The big bank says, that's not good for us right now. We're going to not offer that. And we end up doing our best to make sure that we are really good at mortgage, really good at any real estate related financing, and that the consumer has access to the
Hmm.
largest toolbox with the most tools in it. And then we do that by partnering these days with good operators,
Hmm.
right? Real estate teams or small brokerages who are looking to provide a better quality of service,
Hmm.
not just pad their P&Ls, right?
Right.
Of
Hmm.
course, we're all for-profit business. We have to make money so we can fulfill our hopes and dreams and take care of our families.
Sure.
But at the end of the day, when there's a lot of margin compression and there's that shift in the market where all of a sudden these bigger public or just larger entities start to make it hard for the small business, we come in a more of a partnership mentality
Hmm.
to keep that small business alive.
So, is it fair to say that you are targeting, assisting, working with more of the small business, either small business folk or you said mom and pop? What are the, I guess, who are your, ideal um, clients that are gaining the most from working with you?
Yeah, and I
And
mean, the consumer
how are they
level
finding you
is,
also?
yeah,
Hmm.
no, it's a great question. Anymore, we have to almost have dual roles, right? You have to be I talk about specialized knowledge only because I like to read,
Hmm.
and Napoleon Hill talks about it and Think and Grow Rich. So I'm the lender in one capacity, and then I have to be a relentless marketer
Right. To
to
keep
get in front of
to
people.
keep going. Yeah.
Yeah, so that's like the secondary skill set that I've made sure to learn to acquire.
Yeah.
It's a blessing and a curse, the social media world, right? It's a great free platform for us to kind of get that word out, but some can death scroll on there and go down the rabbit holes in the cat videos. I know I do my best to keep my kids limited to, a certain amount of time on those things, but uh, so two parts of your question. One, the ideal client is the mega team, small team operator who controls, say, 50 or more transactions on an annual basis.
Hmm.
And then the consumer who is wanting to purchase their primary residence, a second home, or is on the early stages of building their investment
So can
portfolio.
you just
So,
clarify for me? Are you not directly consumer facing?
oh yeah, we are.
Okay, but
Absolutely.
you had said
I
I'm just
just
trying to.
personally work
Mhm.
in two
So
capacities.
there's also so you're sometimes going direct with an individual, but there's also you said that there's folks that are doing like 50 loans a year that are.
Oh no, so like you as a developer, right?
Mhm.
If you have a subdivision or you're putting multiple units in the ground annually,
Mhm.
you and I would potentially explore a
Oh,
partnership
I
where
see.
you
Okay.
offer,
Now that
you
makes sense.
you open your own branch.
Okay.
That's where,
Hmm.
on the from the manager perspective, that's my
That's
objective.
really interesting. I've
From
never
the,
really thought about that,
cons
about lenders or mortgage brokers working with developers. That makes a whole lot of sense to me, though. If I'm delivering a whole bunch of homes, why not offer, um, you know, the why not offer a way to get it financed as easily and as possible. That makes you're
Yeah.
giving me ideas now.
Well, in that familiarity, that relationship, as we continue to learn one another's business,
Hmm.
it's security too, and not just for you, but for the consumer, because all too often nowadays, there's a lot of people handing out these pieces of paper that say pre-approved or
It's
pre-qualified,
all over the place.
and
I get so
it,
much spam. I get it just my physical mailbox is just full of pre-approved.
yeah, yeah. And sometimes they're doing that without putting enough due diligence
Mhm.
up front. And so that's the hardest part of the conversation with the consumer is, oh, Tom over at ABC company didn't ask for that. And I'm like,
Right.
I'm sure he didn't. And
Hmm.
and I wish I didn't have to, but it would be irresponsible of me to allow you to write a check
Hmm.
for a deposit
Right.
and to uproot your family, start putting everything into boxes only to tell you a
Right.
week or two before the closing, if you're lucky. Sometimes it's the day before,
Right.
because I'm often the rescue lender that they come to and say, "Hey, this is falling apart. It was supposed to close last
Oh, so
week, and
oftentimes
we're
you're
starting to
coming
lose
in
hope."
actually as the rescue, and not always
Hmm.
as the initial lender that they've come to. Okay, so that's actually
Yeah.
really interesting. So that's another like niche, I guess, that you've carved out for yourself that really shows your strength in being able uh, to get financing done even in tough situations. Which I mean, look, every real estate closing comes with its own unique set of challenges, and obviously every borrower is different. So it's no, it's a very interesting, you know, I guess other part of the business that most of us don't really think about. Who do you go?
Yeah.
Who do you go to
It,
when it
it's
falls apart?
Yeah, yeah, it was by default just because as a younger, I got into this business when I was, what was it, 2005? I was like 21 years old.
Hmm.
And so um, not everybody was going to give you a shot when you're young.
Yeah.
And that was one of the bigger objections. Do you even own a house? No. So I had to cut my teeth, if you will, on the turn downs, the challenging scenarios, which is why I'm in the business
Hmm.
today, right? A lot of people between the last two really big market shifts during my career, lots and lots of originators have exited the business.
Right.
And then licensing requirements don't make it any easier, which that came in around 2010. So um, thankfully it was hard because that made it really hard to quit. And I would just almost like people need you when you know what you're doing, right? If you know how to build on a certain type of property, I'm very ignorant to what developers go through, but especially if it's like a raw land side deal, uh,
Sure.
I wouldn't know the first thing about what the challenges you come through. But if you specialize in something and there's very few that can do it, people need you. Um,
Yeah.
because you bring that specialized knowledge. So it's very rewarding, but it also comes with a really high level of stress. So
Right. Especially in
it
that.
requires good communication.
Yeah, yeah, no, I'm sure it does. So, I mean, what would you say that, in this day and age, what is some of the most challenging aspects of this business? And I guess you alluded to the fact that you have to wear two hats as a prolific marketer in addition
Yeah.
to putting these financings together. So, what challenges do you continue to face in terms of? I'm assuming you seem like someone who's always trying to grow in your business, right? And so, talk to me about what challenges you face today and where you're trying to go in the future.
I'd say the biggest is one that I call it deceptive marketing.
Mm-hmm.
Anything that has fine print, right? When you get that letter in the mail and they have a little logo with an eagle and it makes it look like it's nice and official, it doesn't even have any affiliation with who your lender is or any government agency, but it just gives that appearance. That's usually one of the bigger challenges is
Yeah.
to help the consumer who I may not have a deep, long-standing relationship with understand who to trust and why.
To separate
And
yourself
there's just a
out
lot of
from all the
time.
riffraff.
Exactly.
Yeah.
And to help
Mm-hmm.
educate them enough to say, okay, well, why should I trust this guy over this other company? And that company could be very large,
Mm-hmm.
right? But their website shows what they want to see
Mm-hmm.
in big, easy to read place. But then I have to get them engaged long enough to show them where to find the fine print that shows them they're showing you what you want to see and they're hiding what they don't want you to see. I want to be full transparency right out of the gate. And so those differing business practices are always and have continued to be a challenge.
Mm-hmm.
And technology does tend to make it easier for those practices to get in front of people a little bit quicker.
Mm-hmm.
Um, and then on the flip side, it's more the education of a community or a market in its entirety where I don't believe interest rates should be a reason to sit on the sidelines.
Mm-hmm.
I've been There's a reason that dollar cost averaging works, right? It doesn't matter what's going on as long as I'm disciplined enough to do the right thing. In that world, for me, it's I continue to invest in real estate
Mm-hmm.
regardless of the what cycle we are in. I might have to sharpen my pencil a little bit more
Sure.
when there's not as much margin there, right? There's more margin when interest rates are good. But if I'm going to buy a primary residence, yeah, I was far more cautious when rates were lower and everybody was offering 20, 30,000 over the appraised value
Yeah.
because the few percentage points in interest rate that I might be over, it takes me years to pay 20, 30,000 more than I should for that property. So helping get that out there when the news says the sky is falling and despite the fact that interest rates may be higher than they want them to be, the purchase price is lower and the seller's willingness to negotiate is higher.
Mm-hmm.
So that's what actually moves the needle more. I can go buy equity today, maybe at a little bit of higher borrowing rate if
Mm-hmm.
I'm using leverage,
Sure.
but I do end up better in the long term. And slowing somebody down long enough to know that maybe what CNBC or Fox or whatever news headlines said, that's just for eyeballs. Like,
Mm-hmm.
let's do something for education.
Cool. Um, yeah, I guess I forgot to ask you kind of like what is the infrastructure of your operation? Do you have a team or is it? Um, I mean, your website implies that you have a team, because
Yeah.
the name of your site, right? Is it Brad Flanagan Team.com?
Yep.
So,
Yeah, that's that consumer direct access to us. And I do have, it's a manufacturing process that we
mhm,
enter into, right? We're building a financial product as much as people might think it's just one loan. It's a much bigger industry behind the scenes.
mhm,
So yes, I still do work with my clients directly. We have our conversations and um, generally what happens is that we end up in a group text message. And then a gentleman named Brian is my right-hand man. He helps when I'm in a call like this. I'm in Lake Tahoe for a convention. So that way the service level stays the same and I can still continue to do the business development that's required. And then we have actually, my mom has been a part of my
oh
organization
yeah,
for a number of years.
nice.
So she's even in the background. And then we have our processor who is there and dedicated versus the call center approach where it's like, hey, we rotate and spread out the
Hmm.
love. we want consistency and expectations and service. So we as far as my manufacturing team, that consists of about four of us. And then my branch is at least different markets,
Hmm.
but 15, 17 people, always growing. So
Cool.
it's a lot of fun. We went from 0 to 100 as responsive mortgage as a
Hmm.
whole, because I am at that manager capacity,
Hmm.
uh, contributing to the entire organization. And we started up in April of last year, and we've surpassed 100 people when it comes to
Wow.
all of our
Hmm.
originators and all of our operations. So
It's pretty quick.
that's been fun. We're on pace for 400 million this year.
Wow. Congrats, man. That's really awesome. Um,
Thank you. Yeah, it's due to the hard work of a lot of individuals. Is
mhm.
not I can't take credit for any of it.
Not for nothing. Yeah, man. Look,
Yeah.
I don't actually have I don't have any specific other questions to ask you. Is there anything else that you think is might be interesting to know about what you do and or how folks can can look at what you guys offer in any better way?
I just encourage that people look beyond what is most often marketed, which is the interest rate, right? Like if I had one piece of advice,
Yeah,
it
I mean,
would
yeah,
be start to
everyone's
understand.
obsessed with where rates are. Obviously, I mean, it's unfortunate.
And if interest was the most important thing, everybody would be in a 10 or a 15-year loan, right? Because that's where I'm going to pay the least amount of
That's
interest.
valid. I
So
actually tend to
people
go for
think,
those shorter term loans because of that.
yeah,
But I mean, that's
I, I'm I believe in like some of the tried and true practices or strategies, right? We have essentially three phases of our financial life, and that's accumulation phase,
mhm,
preservation phase, and distribution. So if you're in accumulation, you're still within your working years, right? Or at least in the early to mid career.
mhm,
So cash flow tends to be the most important, hence the 30-year mortgage, right? That's going to allow me to cash flow the most. Yeah, in the first half or first 10 years, the interest is front loaded. It's
yeah,
going to be more expensive.
mhm,
But if you buy right and the market's good enough, you're going to outpace your interest by appreciation.
yeah,
So getting into those philosophies are to me far more important, and not only considering their cost, but the opportunity cost of what they're doing. I'm constantly working with individuals who have good equity in a house already, and they're
mhm,
weighing the option of moving into something different. It's not about, the interest rate and the terms of that next loan. It's what we do with the money that we have as we put that next one together. So if you have a bunch of credit card and car loans, those are better to get rid of than to put a big down payment
right,
down.
mhm,
And taking the time to slow down and just digest that information, that helps me sleep better at night. Even if they do choose to do something that I might not encourage, I'm just glad that they knew what their options were. So when they put their pen on the dotted line, they're comfortable with the decision that they made.
do you actually get into that with like that level of detail with folks about like I guess kind of a more macro look at their balance sheet and where they're holding liabilities like you mentioned credit card debt.
With 100% of the applications that I review, I, I look at it all, and from the macro perspective.
Yeah. Hmm.
And some have the ability and some don't. Some have very limited options based on credit score and capital,
Yeah.
and income. But anybody that has it 100% of the time, if they're willing to entertain
Hmm.
that conversation, they're going to get it in the form of spreadsheets and videos and text and conversations,
Yeah.
so that I can. I mean, that is my duty. That is my responsibility. Like, I genuinely looked for my purpose about 10 years ago and like asked God, what did I come to this world for? And I've tried the volunteering and this and that and the other thing. And I think I got into this business so that I could gain, at the time I got into it, '05, right?
Mhm.
And so I could get the perspective of what happened in 2008. And I realized it was
Sure.
solely just an education problem. If if every person who was responsible for putting somebody in debt, right? I'm responsible for putting somebody in debt,
Mhm.
which is not a bad
Technically
thing. I think
speaking, but
that
yes.
debt is a tool if it's used right.
Yeah.
Yeah.
Hmm.
If I would have, if everybody would have educated them the right way,
Hmm.
we could have prevented a lot of the issues. They would have known to get into the loan they got into or whether they should or shouldn't. And so it's almost like we, as the individual practitioner, have an, a duty and an opportunity to impact our local economies by helping people make the right financial decisions. Discipline and all that, I can help them pay off their credit cards. They could run them back up, right? I can't control that. But ideally,
Right.
they learn something and they gain the discipline and take advantage of the opportunity when we set it up the right way.
Yeah. No, it makes a lot of sense. Cool, man. Well, I really enjoyed the conversation. Glad that we were able
You
to
as well. Yeah.
connect. You've definitely given me some things to think about as a developer, and so I hope you wouldn't mind if I reach out to you offline about a few things. Um,
Please do. Yeah.
'Cause, you've definitely put some interesting thoughts into my mind. And but anyway, yeah, thanks again for joining us today. And as I mentioned before, if you want to learn more about what Brad does and what he could do for you, bradflanaganteam.com. And I'm sure
Fantastic.
happy to
Yeah.
take care of you. So, all right, thanks again, Brad.
I'm old school. I'm on Facebook. You can catch me there anytime.
All right, great. Take care, man.
You too.